Hi there, welcome to GrainTV. It's Friday, January 8th. We had an update in the grains. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn was up 4 cents a bushel, beans up 3/4 of a cent, and wheat leading the complex higher on a 10-cent advance. Most of the day was really about short covering, especially in the case of wheat. We've got very large short positions going into this report on Tuesday, and so we're starting to see those shorts start to lighten the load a little bit, and especially in the case of wheat, which got the market on a 10-cent advance. Corn followed along. Beans had a better day for most of the day, but managed to mostly be unchanged by the end, not holding on to any sort of substantial advances by the end of the day. Let's take a look at what some of the analysts are looking for in Tuesday's report, and in particular, let's talk about U.S. ending stocks. Really, this report on Tuesday has a wide variety of data. We have a final survey of U.S. production for corn and beans. We have quarterly stocks reports. We also have planting intentions for winter wheat in the U.S. So there's quite a bit of data that's going to be thrown at us on Tuesday. Now, what's surprising is that no one really seems to expect a dramatic change in any sort of these underlying fundamental factors. Ending stocks, in the case of supply and demand, are not expected to change at all, as indicated on this existing slide here. You can see corn. Analysts look for no change whatsoever in January's ending stocks projections by USDA, and only modest increases in beans and wheat. Now, the thing that I'm worried about, for those of you who've been watching GrainTV, is I'm really concerned about our lack of export business that's been going on in the case of corn. We talked about this yesterday. We are 25% behind this pace last year, excuse me. So we're 25% short of where we were this time last year. Now, USDA, in their supply and demand estimates, only have us falling 6% below last year. So that's really concerning. That gap of 19% is really large, and we're a third of the way through the marketing year. So we've got 4 months in the books, and we've got 8 more months to turn it around and see better export business. Now, what's troubling is the fact that our competition is really showing up in strong force, and particularly Argentina. We know they have a new president. We know that he reformed export taxes, and he also is letting the currency there, the peso, fall precipitously. All of those factors are spelling problems for our competitive position. Take a look at this chart that shows corn prices at export terminals in the U.S. and Argentina, both converted into dollars per metric ton. Now, we know that they've let their currency, their peso, fall. We've also got our strong dollar, and they have less export taxes. So when you look at where we're at today, U.S. is about $163 a metric ton versus Argentina, that's $153 a metric ton. So that's $10 cheaper. Put that in bushels, that's 25 cents a bushel. This time last year, we were completely opposite. We were much lower in terms of the export picture. We were at 179 versus Argentina at 195. This time of year is our sweet spot. This is when we should be garnering the world's attention. We should be capturing most of that business in international markets because it's their planting season. It's our harvest season. We've harvested the crop. We are the buyer of choice traditionally at this time of year. So back to the export picture. How is it going to improve in the next 8 months with this being the scenario? I think that's a really red flag for the corn market. And I'm not sure USDA will make that change in this month's report, but at some point the data has to start to support what we're actually seeing. So if you're a producer, I'd be very worried about this situation that's brewing. If you're concerned about how much corn you have unpriced, give us a call, 877-472-4607. We can talk you through some strategies and help you think about how to manage the risk that I think is really important in the next 3 to 6 months. Have a great weekend, and we'll see you on Monday.